All right. So good evening, everyone. Thank you so much for joining us tonight. If you missed my earlier spiel, we are both virtual and in person. So thank you for coming here. We're at Paradise Baptist Church in Grove Park neighborhood. And hello to everyone that is on Zoom or Facebook Live. My name's Jen Tremin, and I'm with the Atlanta Beltline Partnership. If you're not familiar with us, we are the nonprofit entity for the Atlanta Beltline. And this is one of our home empowerment workshops. These are free workshops that we put on for homeowners and renters, just to teach you about different resources that are available to you. And we do that with great partners in the city. So big thanks to Atlanta Legal Aid and Grove Park Foundation for partnering with us on this and all of our other tax workshops. And of course, thank you to our sponsors for this workshop series, Delta, Wells Fargo, and Annie Casey Foundation. We couldn't, of course, do it without them. So just a bit of a logistical things before I turn it over to Stacey Reynolds with Atlanta Legal Aid. Since we are both in person and virtual, you will see me occasionally coming in and out. I will we'll pause for questions, and I will alternate between the Zoom and the in-person questions, and I'll repeat them so everyone can hear them. So I think without further ado, Stacey, I will turn it over to you.
Jen, and thanks to the Atlanta Beltline Partnership and to Grove Park Foundation for making these things possible. And it's a little bit weird being virtual while y'all are in person, so I'm sorry I'm not there. But so I'm with Atlanta Legal Aid, which is basically a nonprofit law firm, and we started this partnership with Atlanta Beltline Partnership around the time we started our property tax project, because we started realizing that there were a lot of homeowners that were being put out of their homes because of the increases in property taxes. So we want to try and help people hang on to their homes as long as they can. So we're going to talk today about lowering your property taxes. We're going to start with kind of the scare tactic. Again, we were seeing people losing their home or being forced to sell because we were facing the possibility of a tax foreclosure. And so I want to kind of talk through what that process is to show why it is so important that we try and keep the taxes as low as possible. So the first thing is that the taxes come due. There's a deadline for you to pay those taxes. As soon as that deadline passes, then the interest begins to accrue. As the interest accrues, it becomes more expensive. There'll be a lien issued. If you haven't paid by a certain date, then they'll issue a lien, which tax liens are usually called FIFAs. And in Fulton County, the FIFA can either be held by the tax commissioner, or it can be transferred to a third party. The tax commissioner has promised not to transfer tax liens where the property has a senior or disabled exemption. So another important reason to get those. But eventually, if the taxes are not paid, then whoever holds the lien can foreclose on it. And the first step is a levy and then a tax foreclosure. And that's just a process of providing notice and then auctioning the tax deed off on the courthouse steps. It happens very much like a mortgage foreclosure, but one big difference is that in a tax foreclosure, the owner retains a right of redemption, and they have that right for at least 1 year. That right can last actually for decades. If they don't take the steps to end it, then it can keep going. Problem is, the right to redeem becomes much more expensive than just paying off those taxes, because the right to redeem entitles you to basically buy the house back for whatever was paid on the courthouse steps, plus 20% of that. And every anniversary of the sale, it goes up another 10%. So, typically the properties get bid up a bit on the courthouse steps because they're going to get a return of at least 20% of their money, or they can end up with the property. And so it just becomes a lot more expensive. If you're able to pay that, then you redeem the property and it's back in your name. Everything gets reset as if the tax foreclosure had not happened. If you're not able to pay it, then whoever bought that tax deed can take the steps to foreclose the right to redeem. And so what that does is it's, again, just notices. Again, none of this process involves you going to court. It's all just done by notices. And if you don't take action, then you lose the home. And so the foreclosure of the right to redeem is going to give you a 30-day notice that that's the deadline to pay that redemption amount. And if you don't pay it by that deadline, then you've lost the home. So the key is to try and make sure that you can pay the taxes when they come due. And that's why it's so important to try to keep those as low as possible and as affordable as possible. In order to understand how to keep them low, you need to understand how the property taxes are calculated. They're going to start, the tax assessor starts with the total value, and that's what they estimate the fair market value of your home is. From that, you don't get taxed on that full value, you get taxed on a percentage of it. You get a tax on 40% of that full value. And that's the assessed value or taxable value. From that taxable value, they're going to subtract any exemptions that you get, which is, again, why it's so important to get the exemptions. So whatever is left after you subtract the exemptions gets multiplied times the millage rate. And millage rate is just a fancy word for tax rate. Whatever results from that, that's how much you owe in taxes. If the amount of exemptions you have is more than the assessed value, then that's going to be zero. If it's less, then it's going to be, some amount that's owed. So the two places where you can really try and manage the tax bill is by trying to make sure you keep the total value as low as you possibly can, and the exemptions as high as you possibly can. So basically, there are two ways to do that. The homestead exemptions is what, of course, increases the exemptions that get subtracted, and property tax appeals is where you can be able to argue for a lower total value to lower the taxable value. But today we're going to be focusing on the homestead exemptions. For people who own their home and live in the home, you're automatically, no matter what your age, your income, or whatever, you should be eligible for a basic exemption. And in Fulton, that actually can be a huge benefit because that also includes a floating exemption, which keeps the taxable value from going up too high from year to year. And that applies to both the county and city of Atlanta taxes. And so you can get a tax savings just by owning your home. In addition, there's some more exemptions that apply where someone is over a certain age or has certain life events. So as you turn 62, 65, 70, if you become disabled, a disabled veteran or their spouse or minor children can get some additional exemptions. The spouse of a U.S. service member, peace officer, or firefighter who's killed in the line of duty can get some additional exemptions. So all of these get added to that basic exemption. You get a higher exemption by having these circumstances. Now, a lot of these do have income limits, which means that your income has to be below a certain amount, but most of them do not count your Social Security, your retirement benefits up to a pretty high amount. So even though the income limit seems very low, you may still be eligible for it, especially if you're retired. So it's worth looking into whether or not you qualify for any of these exemptions. There actually is also a 65 or older exemption where that will increase the exemptions that you get to 50,000 instead of 30,000. And that one is available regardless of your income. The ones that take your income into account will actually go a little bit farther than that. So you want to balance, if you have earned income, then you may be over the limits, but if it's all Social Security, then you may be able to qualify for some of these other exemptions. You do have to apply for each of them though. So, if you apply for and get the 62 and older exemption, they're not going to, 3 years later, they're not going to just automatically give you the 65 one. You're going to have to go back and apply at each stage. You have to make that application. Once you've applied and gotten one of the exemptions, they will continue except for one. There is one 65 or older exemption for Fulton County that does expire. So you want to be sure that if you have that one, you're going to have to go back and reapply every 2 years for that one exemption. And the danger is right now what Fulton is doing is they're actually removing the exemption, removing all of the exemptions for not recertifying for that one exemption, which I think is wrong. And well, we're willing to challenge that if we have the right case, but you want to avoid having that problem generally. So you want to be sure to reapply if you're getting that one. Okay, so why is the exemption important now? This is an example. This is actually a 2018 tax bill. And my apologies to people in person, they probably are going to have a hard time seeing this small print, but the basis of this is the 2018 bill. This person already has the senior exemptions. She's already getting a huge benefit from those exemptions. It's already, zeroing out the Fulton taxes, giving her a good reduction on the city of Atlanta taxes. So, it's already providing a benefit. But then in 2019, they started that floating exemption. And so her tax bill for 2019 is almost half what it was in 2018. And that is just because of the changes they made in the exemptions. So that's, just an immediate example of how the exemptions can really help lower your tax bill. Now, in her case, the floating exemption made a huge difference because she was able to lock in a 2016 value, which was significantly lower than the value that she had in 2018 or 2019. And so with that, the part that she's being taxed on could only go up no more than 3% per year. And so that made a huge difference in her tax bill. Now, some of you may have heard of a value cap. That is exactly the same thing as a floating exemption. It's just a different way of thinking about it and calculating it, but it ends up being the exact same thing. Basically, what they're doing is they're capping the increase each year to no more than 3% on the taxable value. I actually had to do the math to confirm, because to me, the way they do it with they do the full assessed value, and then they take that capped amount and put that into the exemption. That was confusing to me. But if you do the math, it comes out the same, that if you basically what they do is you lock in a value from sometime in the past, and that value can only go up, and it's based on the consumer price index, but the increase is going to be no more than 3% per year. And so, in this example, the base year was 64,400. So even though the current assessed value was 118,720, basically she's being taxed on just that CPI increase to 67,124. So it ends up coming out the same. And, it ends up being a big difference in what you end up having to pay on the tax bill, just because of that cap. As we see the values going up tremendously from year to year, having that taxable value only go up about 3% makes a huge difference. The problem is it does not apply to all categories of your tax bill. So you still have to pay attention to what the value is on your home. You still need to consider tax appeals and things like that. We'll talk more about that later. But the part of your bill that does not get this floating exemption, the value increases is going to be huge. The main one that I see is the city of Atlanta schools tax does not have a floating exemption. You're basically looking at the maximum exemption that you can get on the city of Atlanta school tax is 75,000. So rather than capping that, they're just going to subtract 75,000 from whatever your assessed value is. And so as that assessed value goes up and up and up and up, your taxes are going to go up and up and up and up. So it's really important to keep an eye on both the exemptions and the value. So I'm going to pause right here to see if there's any questions, but if this can get really confusing.
Okay, any questions for in-person or Zoom audience? Give it a couple minutes just in case people want to type them in. Do any of you guys in person have any questions about the floating cap?
Looks like somebody raised their hand on Zoom.
Sure. Yes, ma'am. What's your question? Sure. Stacy, would you mind explaining the floating exemption one more time?
Yeah. Actually, the hard part is trying to figure out where somebody gets confused, because it is confusing, and like I said, I actually had to do the math to figure it out. And, you know, I shouldn't be doing math. So the way it works is it locks in a value. So in this example, the value that was locked in was, I think, a 2016 value, where the assessed value for 2016 was $64,400. From that date, it could only go up no more than 3% per year. And so you add that 3% or whatever the percentage is to that base year. And then that is the amount that becomes your taxable amount. And so, so they'll multiply that taxable amount. Well, they'll take the taxable amount, subtract any exemptions, and multiply by the millage rate to figure out how much your taxes are. That's the way it makes sense to me. The way it looks on your bill is the exact same thing, except instead of using that taxable value as the assessed value, they're going to use 40% of the fair market value, which in this case is $118,720. And they're going to take the difference between that and the $67,000 and make that a part of your exemption, so that what you end up being taxed on is the exact same amount, but that difference is going to be, you know, blended into the exemptions. That's why it's called a floating exemption instead of just a value cap. Did that help?
Yes, thank you. All right. I don't see any in the Q&A, so I think you're good to go on to the next section.
Okay, and for, you know, if people, like, if you have questions that occur to you after we move on, or if you're like me and just type really slow when you're typing your questions, I'll be answering questions sort of periodically through this, and then we'll definitely do a question and answer at the end, where hopefully we can get, you know, anything that's confusing taken care of. Okay. So let's talk about who is eligible for the exemptions. And this is actually where my passion is. This is what I really, really, really want y'all to learn about. And I want you to spread the word, because I feel like there are a lot of people who are eligible for exemptions that are not getting them right now. And part of the reason, and I'm a victim of this, the easy way of explaining who gets a homestead exemption is to say that if you own your home and live in it, you can get an exemption. And that's true. But the people who can actually get the exemption is a little bit broader. A bona fide claim to ownership is actually a little bit bigger than just you have a deed in your name. Now, if you have a deed in your name, you're going to be eligible for the homestead exemption if that is your primary residence. And that's true whether the deed is in your name alone or with other people. Now, there is an exception for spouses, and I'll talk about more about that at the end of this slide. But if you have a deed in your name and you live in the home, you should be able to get the exemption. Now, if you own the home jointly, you probably want to figure out which of the joint owners that lives in the home has the highest claim, highest exemptions, because that's going to be the one that you want to have the exemption. But in addition to just having full title in your name, even if it's just a life estate that you have, you're still eligible for that homestead exemption. Also, if you have a contract for the purchase of the home, and the end result of that contract is that you're going to own the home, you're eligible for the exemption, even if you don't have the deed in your name yet. The person who resides in the home that is owned by a parent who is deceased or incapacitated is eligible for the homestead exemption, even if the property has not been distributed. Now, if the property's been distributed, then you've got a deed, and whoever has inherited the home is now the owner, and they have a deed in their name. And so, so clearly, if the law allows for a child of a homeowner to get the exemption, even if the property hasn't been distributed, then that means that they're allowed to get it, even if the deed is not in their name. Also, if you're inheriting the home and the property is still in probate, you're still eligible for that homestead exemption. And so both of those things are really huge for the legacy homeowners and heirs property. Because it takes time to go through the probate process. You need to be able to get the homestead exemption while you're dealing with all of that, so that you can, afford to keep the home at the end of the probate. So spread the word on those. You're also eligible for the homestead exemption if you live in a home that is in a trust and you're the beneficiary under the trust. Finally, you're also eligible for the homestead exemption if you're the spouse of the homeowner and you live in the home, even if the homeowning spouse doesn't live in the home. Now, that's true, except if the spouse has an exemption. Unfortunately, spouses are considered just one exemption, even though it's two people. So only one of you is going to be able to get the exemption. So if you're separated from your spouse, even if both of you individually own homes and individually have your own primary residence, only one of you is going to be able to get the exemption if you're married. Okay. Again, this is to me the crux of what I'm doing these outreach presentations for, because I really want to get the word out that there are people that are eligible for these exemptions that are being turned away basically by the Fulton Assessor's Office. Because we want to try and make sure that these legacy homeowners know that they should be able to get the exemptions. Are there any questions at this point?
Yes, there are a couple. So I will go to the Zoom questions first. So do you qualify for homestead exemption if you split time at another residence during the year?
You can only get it at one residence, and it needs to be your primary residence. So if you're splitting time, it's whichever one is your primary residence. It needs to be the one where all of your cars are registered, it's where you vote. It's the one that has the indicia of it being your primary residence.
Great. And our next one on Zoom is, do you have to apply for the homestead, floating, and Atlanta schools exemptions separately?
No, so the application is all in one. And when you submit your application, the assessor's office is going to evaluate which exemptions you qualify to get. And if you qualify for the basic exemptions, it's going to be the basic exemptions for all of those categories. But the amount of the exemption is going to be different based on the different categories.
Okay. Yes, ma'am.
Excuse me, if you have applied for homestead exemption, say like 3 years ago, how often do you need to apply for homestead exemption?
Sure. And Stacey, I believe you're going to get to this question a little later, but we can go ahead and give a teaser. So if you apply for homestead exemption 3 years ago, how often do you have to apply?
Well, I actually just mentioned it a little bit a minute ago, that once you apply for most of the exemptions, they will continue as long as you continue to be eligible for them. You do need to notify them if you, no longer live there or no longer qualify for the exemptions. But as long as you continue to qualify for the exemptions, you don't have to reapply unless you're in that one Fulton County 65 or older low income exemption that has to be renewed every 2 years. If you're in that one, then you do need to go back and reapply every 2 years until you can move into the 70 or older one. So you shouldn't have to, you do need to go back. You're not going to need to reapply for the exemptions you're getting, but if you become eligible for new exemptions, you do need to apply for those new exemptions.
So I'm still kind of confused here. Okay, so you're saying only if you need to apply every 2 years if the exemption applies only to you?
I'm just not sure if you heard that question or not, Stacey. So asking again, if you have to apply every 2, will you just explain how often you have to apply again for those certain ones? And then there's certain ones you have to apply like as you age through the bracket too.
As you age. So say if you apply for a homestead exemption and you apply for like 72, 71, okay, and then do you need to apply for it again when you get say like 75 or 76?
Stacey, would you repeat the different when you have to reapply at the different age levels and things like that?
Yeah.
Yeah. So basically there's one at 62, there's one at 65, and then there's one at 70. So when you turn 62, if you meet the income limits for that one, then you need to apply then. And then again, when you turn 65, and then again when you turn 70. Now, on the one for 65, though, you want to be careful because there is one exemption for people who are 65 and older. It technically only applies to your Fulton County taxes. It doesn't apply to the city taxes or the schools. But unfortunately, what they're doing is they're wiping out all of those exemptions. And so if you have that one, so between the age of 65 and 70, you want to check to make sure that you actually, you want to make sure that whether or not you have that one that needs to be renewed. If you don't have that one that needs to be renewed, you can just wait till you're 70. But if you have one that needs to be renewed when you're 65, then you need to apply every 2 years until you hit 70.
Okay, I guess let's take the 65 out of there and just answer the question only for, like, if you apply when you were 72 and then you get to be 70, 60, you need to apply again.
Do you have to apply after the 70?
Yeah, just in the 70s.
After the last 71, do you have to reapply?
Yes.
No, as long as you continue to be eligible for that, then once you turn 70, that's the kind of maximum that you're going to get. Now, there's an income limit on that. So, if like you're still working at 70, and so when you apply, you can't get that one, then you want to apply, later when you stop working. But once you get that 70 or older exemption, you don't need to reapply. And really, disabled will also trigger some of that. So.
And I'm going to tease to the end of the presentation too. So we will be having help sessions on March 12th and 19th, and we can go into your further one-on-one circumstances then and help you apply and all that good stuff. And Stacy will stick around for a little bit after the presentation too, if we want to get more in depth. But we will have some help sessions coming up for anyone that wants one-on-one assistance applying.
Yeah, and I'll give more information about that too. I think somebody raised their hand, Alicia or something. Zoom.
And it just went down. So did you have a question in person?
Yeah, as far as he's saying that the homeowner, the exemption can only be filed in one person's name. So if the surviving homeowner or spouse, what happens with that person? Do they still hold that exemption?
So Stacy, this is the question. If the homestead exemption is in that person's name, what happens if there is a surviving spouse? Would they have to reapply, or explain maybe that process a little bit?
Yeah, that's a great question, and that's not something that I really cover, which I should. So the homestead exemption is personal to the person who has it. And so when you have joint ownership, it's a little bit confusing about which of you actually has it. It may be more obvious if one of you is a senior and one's not, which of you is getting it, if you're getting the senior exemptions. But when the person who has the exemption passes away, their right to that exemption ends. And so that means that whoever now owns the home needs to apply for the homestead exemption in their own name. And that's, if it's the child of this, a deceased parent, they should be able to go in and apply and get the exemption in their name. Or if you're probating the estate, then the person who's going to end up inheriting the home should be able to get the exemption during that time. But it is personal. So if you have a deceased homeowner that's getting the exemption, they can remove that. And unfortunately, Fulton County will remove it. In some cases, they'll actually not only remove it for the current year, but they'll remove it for the 3 prior years or up to 3 prior years. And suddenly, even though you've been paying the taxes, there's going to be a huge tax bill owed because you can't go back in time and apply for the exemption for those 3 prior years. So it's really important that you take action as soon as you can to get that fixed. And this is going to be based on whoever was the person entitled to the exemption as of January 1st. So if a person dies during the year, you don't really need to worry about it until the following year, but you do need to worry about it.
Great. All right. Thank you. And Stacy, I think you can continue.
Okay. Okay, you do have to live in the home, and somebody just asked that question about, if you have more than one home, it needs to be your primary residence, and it needs to be the home that you live in as your primary residence. And so if you're away from the home, you are allowed to be away from the home, but only in circumstances where it still continues to be your primary residence. So like if you would be at home, except you're away because of health reasons, like you're in a nursing home or a hospital, or somewhere where you needed to go to get care, that's still your primary residence. So you're still entitled to the homestead exemption there. Also, like if you're serving overseas or serving in the armed forces generally, where you have to be, where you're serving, but this is still your home. But if you weren't out serving in the armed services, then you would be at that home. And also, if there's a flood or a fire or something like that, and the home's uninhabitable, then it's okay for you to not be inhabiting the home. That one does have a limit, though, that you really only get a year to get the home back to being livable, to be able to continue getting the homestead exemption. So let's talk about how to apply. So there are 3 ways to apply. One is you can apply online. You can also apply by mail, or you can apply in person. The key, though, is that no matter which way you apply, you want to be sure that you have proof that you've applied by the deadline. If you're applying online, you're going to get that proof automatically. It's going to, the computer is going to immediately generate a confirmation page and send you a message that you've applied. If you're applying by mail, you want to be sure to send it in a way that it can be tracked. So either that, you want to be able to show both that it was mailed before the deadline and that it was received by the tax office. If you're going in person, you can go to any of the main tax offices and do this in person, but especially with COVID, you want to be sure to check ahead of time whether they're open to people walking in, whether you need an appointment, anything like that. You want to be sure to make sure that it's okay. The other thing is that, unfortunately, I keep getting reports of people who try to go in and apply in person, and if they fall into one of those categories where they don't have a deed in their name, sometimes they're just turned away. They're not allowed to make the application. I don't think that the tax office should be allowed to not take an application. They can deny it, but they should take the application. But so if you go in person and they refuse to take the application, sometimes it's just hard to overcome that. So you want to be sure that you can at least prove that you tried to apply. If you do it early enough that you can then, contact us, we can try and help you with either getting the application in either there or by doing it online or doing a paper form. Okay. You also want to be sure to check with your city. Some cities use Fulton County to do their applications, like the city of Atlanta uses Fulton County for all of their exemptions. Some cities, though, require you to go to your city to get the exemptions, and that's especially true with some of the senior exemptions. So you want to be sure to check with your city to make sure you're getting all of the exemptions that you're entitled to get. You want to have the exemptions help you with both the city taxes and the county taxes. Okay. Again, I think the online applications is the best way to do it. It can be a little confusing sometimes. I recognize that, and that's why we're having the help section. So I want to talk a little bit about that, and then I'm also going to use this as a chance to sort of explain some of the things that you're going to need no matter which way you go for making the applications. So if you're going to do an online application, you're going to start at fultonassessor.org. That's their website. That's where you start. And you'll see, on the right-hand side here, there's a list of links that you can go to. It'll either be on the right-hand side of your screen or at the bottom, depending on what kind of device you're looking at. You want to look for online services, click on that. That's going to bring up this, and you click on the link to access SmartFile. SmartFile is the system they use. SmartFile does require a login. So the login is going to require you to have an email address that works, that you can actually check. If you already have an account, then you just put in the email and the password and log in. If you don't, or if you have one and you've forgotten the password, those links are down at the bottom here. And so what you're going to want to do if you don't have an account is click on the new user, create an account. It's going to come up and ask you for an email address and a password. And so that's going to go ahead and set your password. And as soon as you hit enter, it's going to send an email to the email address that you use. And you're going to need to go to that email address to click a link to activate the account. So if you're doing this, if you don't have an email of your own, you need to make sure that you have someone who can help you, that can, get to the email and click that link. And any messages that are generated are going to end up going to that email address. And this is something that you can work around. So once you've actually logged in, then you're going to see a screen, and along the top is a bunch of different options. You want to go to available filings. In the available filings, there's a whole list of things. You want to look for homestead exemption, click on that, and then you're going to need to pull up your property. It's a little confusing because I give these three things and it kind of looks like you need to fill in all three of them. You really only have to fill in one. And what you're doing is you're trying to fill in what they have to be able to pull up your property down here at the bottom. Their search system can be a little persnickety, so just try it. For example, like homeowner's name, if you did the person's name was John Smith, you do Smith, John, no comma, and hopefully it would bring up the property. You want to identify your property, select that one, and then you're going to just work through the different pages. But there are a couple of things that I think get a little confusing, and this is one. To apply for additional exemptions, you actually, some of this is a little counterintuitive. It seems straightforward. It asks you, did you own or occupy your home on or before January 1st of this year? Yes. Are you a resident of the city of Atlanta? Yes or no. Do you wish to only apply for the age 65 exemption with no income requirements? The answer to that depends. If you're still working, or if you think your income is too high to be able to get the other senior exemptions and you're 65 and older, then you want to say yes, because you want the exemption that for 65 or older, regardless of the income. But if you want to apply for one of the exemptions that do have an income limit, then you want to say no. And then you'll go to the next piece where it says, do you wish to continue? It's like, well, everyone wants to continue, whether you're trying to get these other exemptions or not. So it's a little confusing. What it's asking here is whether you want to continue with the other specialty exemptions. And if you do, if you do fall into that category at 62, 65, 70, disabled, of, spouse of a police officer, firefighter, service member who's died, any of those other categories, you want to say yes. And when you say yes, it's going to come up with some additional questions, and you're going to just work through those questions. Were you 62 before January 1st? Yes. Were you 65 before January 1st? Yes. Were you 70 before January 1st? Yes. They don't start with, are you 70? So you kind of just keep working through the questions, and it'll keep, as you answer, it'll pop up new questions until you get to the end, and then you'll hit next. But it's really important, if you're going to try for those specialty exemptions, you want to say, no to the 65, no income, and yes to do you wish to continue. Adding documents. So this is where this applies whether you're doing the online exemptions or applying some other way. They're going to want to see some basic documents to confirm that you're eligible for the homestead exemption. And in the online version, this is where you're going to upload those documents. So they want to be sure to see your identification. So if you go in person, you can just show them your ID. But if you're either filing by by mail or online, you're going to need to provide a copy of that. And it needs to be a valid state issued ID. You also need to provide the vehicle registration for any cars or vehicles that you have registered in your name. You need to provide the registration for all of them. And that, which seems weird because, you know, the tax office already has that information, but you have to provide a copy of your current registration. And you need to be sure that any cars that you have or any vehicles are registered at that property where you're trying to get the homestead exemption. The last category is supporting documents. And this is kind of anything else that you need to show you're eligible. If you're applying for one of those categories where income is an issue, this is where you upload the income. And so you're going to need to provide a copy of your tax returns if you file your file income taxes. If you don't, then you're going to need to file the award letter from Social Security or whatever benefits you're getting to show, you know, what your income is. This is also where you upload the proof that you're disabled. And this is where you have the opportunity to upload anything to show you're eligible for the exemption that's not readily apparent. So this is where, you know, you show that ownership interest that gets you that homestead exemption. And I'm going to talk more about that part in a minute. But if you're going to do the online application to upload the documents, you're going to click on select files. And that gives you the choice of uploading the documents either by taking a photo. So you take it right there and it'll sort of automatically populate it. Or you can go to your photo library to pull up a picture of whatever document you're trying to do. Or you can browse if you have a scanned copy of whatever you're doing. So whichever way is easiest for you or makes most sense for you, you can do it that way. Again, if you have problems with how to do these, how to upload the documents, we are having workshops where we can help with that. Okay, so we're going to talk about what supporting documents show ownership. So now if you have a recorded deed in your name, that automatically shows ownership. If you've had the deed in your name for a while, then you probably won't need to supply that. So, if they already have your name as the name on the property in the tax office records, you probably don't need to provide your recorded deed. But if you just recently purchased it, they may not have that information yet. You're going to need to supply it then. Or if you fall into one of the categories where the recorded deed is in someone else's name, you need to provide the last recorded deed plus whatever documentation links you to that last recorded deed to show that you are eligible for the homestead exemption. So for example, if you're applying as the son of the parent who is incapacitated or deceased, then you're going to need to show, a birth certificate showing you're the son. And if they're deceased, the death certificate showing that they passed away. Or if they're incapacitated, something to prove that they're incapacitated. If you're inheriting the home, you want to show the deed in the deceased person's name and the probate records to show that you're probating, or if there's a contract for deed, whatever it is that makes you eligible for the homestead exemption and how it links back to that last recorded deed is what you need. For a trust, you're going to want to show the trust documents to show that that you are a beneficiary under the trust. So these are the things that you need to come up with. Again, we're doing some help sessions where we're going to try and help people make sure that they know what they need to supply. And so especially if you fall into one of the categories where the recorded deed is not in your name, I recommend that you get some help to try and help you figure out exactly what documents you need. Okay. I also find it useful when I'm uploading the documents to add in a statement that explains what I'm doing. So again, I'll say I'm eligible because I am the daughter of the homeowner who died, last year. So I've included a copy of, you know, the deed in my mom's name, the death certificate, the birth certificate. These are the things that show that I'm eligible for the homestead exemption. So just some sort of statement. There is a limit on the number of documents you can upload. I don't remember what that limit is, but if you reach that, then leave off the statement. But if you have room, it doesn't hurt to have something sort of explaining what it is you're including. Okay. If while you're in the middle of the application, you decide you need to stop and come back later, particularly if you like need to get the documents and then come back and add them later, you can do that. What you're going to do is when you log back in, instead of going to available filings, you're going to go to my filings. Under my filings, you should see that there's a draft homestead exemption application that has not been submitted. And so you'll select that, and then that'll bring up the application again. And what you're going to do for uploading documents is you'll just go over to the attachments tab and go back to that screen that allows you to upload the documents. Submit is a very important piece of this. You only want to hit submit once you've actually uploaded everything that you wanted to upload, that once you've completed the whole application and everything's right, then hit submit. But keep in mind that April 1st is your deadline. If you do not hit that submit button by the time April 1st ends, you are no longer eligible for the exemption for this year. So you want to be sure, no matter what, that you actually do hit that submit button before the end of April 1st. You can print this, you can print the whole thing either before or after you hit submit. Personally, I usually do it after, but if you wanted to check the draft before you hit submit, you can do that. Just be sure that you go back and hit submit. I did talk with a woman last year that apparently just never hit that submit button. And so she technically didn't apply by the deadline. So you want to be sure that you hit submit and get it submitted. Once you've hit submit, it is going to come up with a confirmation to say, hey, you have submitted your application. Congratulations, You can also double check the status later. So immediately after you hit submit, it's going to automatically generate a message in the message center that says, your application has been submitted. Also, if you go to my filings, instead of having a draft application, it's going to show an application that was submitted. So both those things confirm that you actually did get the application submitted. The message center is also going to be a place where if they need more information, they may send you a message through the message center to ask for more information, on down the road. So you can come back here periodically and just check in on the application. Anything that's sent to the message center should also be sent to the email address that is linked to the account. But, sometimes it gets into your spam folder or just gets overlooked. So I would say just periodically go back and just double check to see if there's anything in the message center that you need to react to. Okay. The deadline is April 1st. If you do not apply by April 1st, you can still apply, but it's not going to go into effect till next year. So, if you turn 70 in May, apply now for, anything that you're eligible for before the age of 70, and then go back and, the day after your birthday and apply for next year for the 70 or older. But again, for anything that you're eligible for this year, the application has to be in by April 1st. So I'm going to pause again. Are there any questions now?
Yes.
Okay.
All righty. So there's a few questions in Zoom, but before I get to that, I'm just going to make a couple of announcements. So we did drop the link for the filing in the chat. For those of you in person, we have paper applications if you're interested. And also one of the forms have all the documentations that you need. So we can talk afterwards and I'll make sure you guys have them. As a reminder, April 1st deadline, we have it big all around us so no one forgets. And then also tomorrow, you all will receive to your email that you registered with the recording, a copy of the presentation, and information on how to register for the help sessions. And of course, we'll tell you guys here in person as well. Alrighty, okay, so we got quite a few questions in the Zoom. So does the address on your ID have to be the same as your current address?
It makes things easier if it is, because again, it's a good indication of what is your primary residence if the, if the ID has the same address. Technically, it doesn't have to be, but I don't know what they'll do with it, especially if you go in person. A lot of times they'll balk at it.
Stacey, would that be a situation where you could submit a supporting document maybe if there was a reason why the address was different?
Yeah, and I mean, what you'd want to do is provide something to confirm that you live in that home, like a utility bill or voter registration or something that confirms that you actually do live in that home. And it wouldn't hurt to have a statement saying, I bought the house last year. My license expires later this year. I'm just waiting until I can just renew it with the new address. Some sort of explanation is good.
That might be a segue into our next question. So someone is building a new home in West Midtown. Congratulations. They have a contract on the home, however, have not closed yet. Expect to be within the home in the next 30 days. Can we file for the basic homestead exemption prior to closing by submitting the contract to purchase?
So I think of the contract purchase being more in line with where you have like a contract for deed or a lease purchase agreement or something like that. But technically, I think it would apply also to home sales contracts. Now, the contract has to have been signed before January 1st in order to fall into exemptions for this year. So if they sign the contract after January 1st, then they're going to need to wait till next year. And you're going to have a hard time convincing the tax office that you should be getting the exemption yourself this year, because they're usually going to look at who was the owner as of January 1st and who, because the seller was the owner as of January 1st, they're technically the ones that are going to be eligible for homestead exemptions. But where it's a brand new property, they probably aren't getting homestead exemptions. And it's worth a try.
Follow up to that, they said their contract was signed on October 26, 2021.
Okay, so yeah, it's definitely, within that, it was there before January 1st. If the end result of the contract, if it's performed is ownership, then it should qualify.
Great. Okay, some more on Zoom. If you inherit a property and don't have your vehicles registered at the house immediately following the former homeowner's death, how do you apply?
You're going to need to go ahead and get the vehicles registered before you apply. That's going to be one of the things they automatically are going to, send it away and make you go and register the cars. I had a colleague that, she had bought the house and went in, she bought like in December, she went in January to file it and ended up having to go, down the hall to the tag office to get the tag switched before she could get the homestead exemption.
And you have 30 days, so hopefully that gives enough time to make sure you get that in before April 1st.
Well, my friend was able to do it that day, so I think you can do it quickly. It's just finding the time to go stand in line.
Yes. Okay, so another one, recently purchased a home in Atlanta, another congratulations to you, and was looking into the homestead exemption. Noticed that the real property tax return is listed close to the application for homestead exemption on Georgia's DOR website. Questions. Is the real property tax return related to homestead exemption?
So the timing of both is the same. The deadline for filing a real property return is April 1st, and that is also the deadline for filing the homestead exemption because both are based on when the books close. With real property, you do not have to file a real property return. It's basically they'll figure out what they think the value is going to be. kind of regardless of what you put on your return. So, so you don't have to file one. If you want to file a real property return, you can. If you want to, assert a value that you think it should be, you can file that and the homestead exemption at the same time.
And I know this workshop in particular doesn't quite cover that, but do you have any quick resources you could share to determine if they need to file a real property return?
I don't. Again, it's not required for residential property or especially homeowner occupied property. What's going to happen, because basically the real property return is for you to assert what you think the value of the property is. And you can do that anyway. When the notice of assessment comes out, you can say what you think the value should be. And you can appeal whatever they think it is and assert your own. So you don't need to file the real property return in order to challenge the value.
Okay, any questions from our in-person folks? Yes, sir.
Is there a phone number or a website that you can go to check the current homestead exemption status?
Yes. So I don't have the phone number memorized. Stacey, do you have the phone number memorized, or is it at the end of the presentation to check the status of homestead exemption?
I don't. I know it's option 4, but basically, if you go to fultonassessor.org, the website, you can look up your property and it'll give kind of the code of what your exemptions are. But more importantly, they'll also have the phone number on there for, basically what you want to do is call the Fulton Assessor's office and ask what exemptions you're getting and whether you need to get additional ones. We can certainly add it to what you email out tomorrow.
Yes, and I'll try to look it up by the end of the night too. Any other questions? Yes, sir.
Well, individuals with disabilities and aging, do you have to do a complete new application on it?
Stacey, would you mind repeating about the new applications for disabilities in the different age brackets one more time?
So yeah, there are different exemptions, like different levels of exemptions at age 62, 65, and 70. In addition, you can get a senior exemption at a younger age if you are disabled. You need to be 100% disabled. Also, there's a disabled veterans exemption that is for someone who's 100% disabled under the VA standards. You can get a very large exemption. I think those are the main ones that you're asking about, right?
What was the last one?
For veterans. So you may have missed this. We'll repeat it at the end too. So we'll have help sessions coming up. So we can work with you one-on-one for your certain circumstance and make sure you're getting the correct filing. Any other questions? Perfect. All right, Stacey.
Okay. So I was also just trying to quickly figure out the phone number, but I didn't find it. Sorry. Okay, so let's move on. Be sure you get proof that you did file by the deadline. If you're filing before April 1st, you want to be sure that you get credit for it, that it doesn't just go into some black hole. And then, if you can't prove that you actually did file it, then just, your word against theirs. And if they don't think they've got it, they're not going to process it for this year. Also, file an appeal if your notice of assessment does not show the exemption that you applied for. If you think you're eligible for it, you need to appeal that. Now, it may be that when the notice of assessment comes out, they may still be processing the applications, but this is still your opportunity to appeal. So what I always say is go ahead and appeal, and then you can withdraw your appeal if they approve it. But if they don't approve it, then you want to be sure to preserve that right to appeal their denial. So this is what the notice of assessment looks like. This is going to come out usually in the May-June timeframe. This is one from last year, but they always look the same. There is a legislation that may change the look of them, but this year it's going to look basically like this. And so for looking for the homestead exemption, you're going to look here. this is where it says yes or no on the homestead exemption. If it says yes, it'll be followed by a code. In this case, the code is HF01, and that's the basic exemption. There are a whole slew of other codes because, the H62 exemption applies to different pieces, and there's different kinds of H62 exemptions. So, so different codes show which parts it applies to. I have no idea. I have tried to decipher their codes. To me, it makes no sense. So if you've applied for a senior exemption and it says yes, and the code is something other than HF01, it's probably been approved. But you can always call that phone number to find out, to confirm whether or not it actually has been approved, or what exact exemptions it's showing. If it says no, then that means that they're saying that there are no exemptions. Again, they may still be processing your application, but if it says no, then you want to go ahead and appeal to preserve the right to appeal later. So that if they never process it, you've appealed and forced them to consider your homestead exemption application. While we're on the notice of assessment, I want to hit on some other key pieces. The top right up here, it shows you the date that the notice of assessment was issued, and it gives you the deadline to appeal. So that deadline to appeal is going to be 45 days from the date the notice was issued, not the date you received it, not the date that someone received it, even if you didn't receive it. That your deadline is still going to be that 45 days from the date it was issued. So you want to be sure to keep an eye out for these. Listen, usually there's going to be some news stories about people getting their notice of assessment and being happy with that or whatever. Keep an eye out for it. And be sure that you get your appeal in by that deadline. You also, this is your opportunity to look at what the value is. So you want to look, it'll show you the previous year's value and this year's proposed value. If that's a big jump, you want to think about appealing the value as well as the homestead exemption. Down at the bottom, it's going to show you the estimated taxes. What they've done is they've used last year's millage rate and the new value to estimate what they think your tax bill is going to look like for this year. The millage rates are not out yet, so they can't say what it's going to be now. They can only estimate. And the value of it is that it gives you kind of if you compare this tax bill or this estimated tax with your last year's tax bill, it gives you a little bit of an idea of what that change in value is going to do to your tax bill. If there's a big jump, you want to consider appealing it. But there's no guarantee that that number is what's going to be on your final bill. Okay. Tax appeals. I'm going to do just a very brief thing here on tax appeals because I will be doing another presentation with the Atlanta Beltline Partnership and Grove Park Foundation in that June or May or June timeframe, around the time the notices of assessment come out. And we'll go into this in a lot more detail at that point. But I just want to hit some of the high points. The tax appeal is your chance to argue for a lower value. That will end up giving you a lower taxable value if you win. It's also your chance to show that you're eligible for homestead exemption if they have denied you. So both things are things that you want to do a tax appeal for. You have to appeal within 45 days of when the notice is made available. That does change from year to year. I can't tell you, April 1st is the deadline for applying for your homestead exemption, but there is no such deadline for the appealing the notice of assessment. It all depends on when that notice of assessment is issued. One of the great things, if you do a tax appeal, if you appeal the value, you can get a 3-year freeze, which means that it's not even, the value cap. It actually will freeze at the value that is the end result of that appeal. If you actually go to the Board of Equalization hearing, or if you reach an agreement with the Board of Assessors that includes that it's going to have that freeze. And what will happen is whatever value is the end result will be for the year you appealed and the 2 years after it. So for 3 years, you'll have that same value. A lot of people are afraid of going to the Board of Equalization because they think it's scary. It is not scary. It's not, I swear. The Board of Equalization is just 3 taxpayers, just like you, who have the same concerns that you do, that are tasked with deciding what they conclude is the actual value of the property based on hearing arguments from you and from the assessor's office. That's it. You know, all you have to do is be able to go in there and basically give them something to hang their hat on for why the value should be lower. You do have to present some evidence to show a lower value. It's not enough to go in and say, listen, I can't afford these taxes, because unfortunately, that's not anything they can do about. There's nothing they can do about that. All they can do is decide what that value should be. And by lowering the value, that will lower your taxes. So you do need to present some sort of evidence that supports that lower value. So I saw this graphic on Facebook and stole it to fit it here because it does a really good job of sort of summarizing what you do in a tax appeal. Your goal in a tax appeal is to present evidence that the value of your home should be more like this than like the mansion that they think it is. So you want to be able to show, you know, the reasons why your home is not worth as much as they say. Okay. This is a timeline. This will sort of summarize what the entire tax appeal, tax year thing looks like. January 1st is when you establish that ownership interest. So as we talked about before, this is when, you know, whoever owns the home at that point, whatever age you are at that point, that's what they're going to be going off of as far as who should get the homestead exemption, who should pay the taxes, all of that. April 1st is your deadline to file for the homestead exemption. Sometime after April 1st, they're going to come out with that notice of assessment. We don't know exactly when, sometime probably in the May, June timeframe. From that day, there is exactly 45 days to file your appeal. So you want to be sure to act quickly once you get that notice of assessment to decide what you want to do and file that appeal. As you can see on this timeline, the deadline to file the appeal is before you get to your tax bill. Your tax bill comes out after the deadline is passed. So once you get your tax bill, it's too late to appeal. So that's why it's really important to jump on it when you get that notice of assessment. If you have appealed, then the tax bill is going to be a temporary tax bill. What that means is that they're going to issue the tax bill based on either last year's value or 85% of the proposed new value, depending on which is less, so that you're not paying the full tax while the appeal is pending. Now, the appeal can be pending for, you know, well into the next year. So you want to be sure to be sort of saving money. So in case the value ends up being higher than what they've done the tax bill on, you can afford to pay those taxes when they finally issue that final bill, because they will do a final bill at the end of the process once they have a value established. If you've paid more than what the end result is, then they'll give you a refund. Sometime, you know, after you filed your appeal, the county is going to respond. And it's either going to be that they are going to stick with their value, which they call it a no change notice. And if they do that, then it'll automatically be sent over to the Board of Equalization, or they can respond by changing their value either to what you've said or to some third value. And that change notice is going to look like another notice of assessment. But on this one, you only have 30 days to appeal. And you have to appeal in writing to ask that it go to the Board of Equalization. And you want to go to the Board of Equalization to get that freeze, or that's your chance to reach out to the assessor's office to see if they'll agree to a new value with that freeze. So, and again, the time for the Board of Equalization hearings, in the years that we've been doing this, I have never seen them conclude all the hearings by the end of the year. They almost always continue into the following year. And so it can be a while before you actually get your hearing. Okay. Again, the deadline is April 1st. real briefly, I just want to say there are 2 tax deferral options for people who are 62 or older, but they're very narrow. Their income guidelines are very strict. It's, they're counting all the income, Social Security and everything. And it can only be up to a certain value of the property. So if you have a mortgage or something like that, it becomes harder to get. But there are a couple of options that you can talk with the tax office about. Basically what it would do is it allows the lien to accrue interest at a lower rate than it would, otherwise. Okay, to recap. Homestead exemptions are subtracted from the taxable value. So they automatically give you a tax savings. You have to apply to get the exemption. They're not automatically given to you just because you have a deed. You also have to reapply if there's any change in your eligibility, or if you have that one exemption that expires. And I would say just keep checking in to see if there are any additional exemptions you should be getting, to see if you need to reapply and to make sure that you don't have the one that expires. The deadline is April 1st to be able to get the exemption for the current year. Again, you can apply at any time, but April 1st is going to be the deadline if you want to get the exemption this year. Appeal if you're denied an exemption that you should be getting. And if you go into an office and they refuse to take your application, you still should appeal. If the notice of assessment doesn't give you the exemption, you should appeal that. Get help, especially if you're in one of those categories where it's more complicated about showing that you're eligible, or if you are concerned about your ability to be able to upload documents. We're here to help. We're going to do 2 in-person help sessions. One is on March 12th. In Grove Park. It'll be at the Allen Temple AME Church. On March 19th, we're going to do one in Pittsburgh Yards. Both of those are going to have in-person help where you can come and meet with somebody one-on-one and actually make sure that everything is done and answer your questions and all of that. We're hoping to also have a virtual aspect to that. So for those of you who can't go into one of these locations, we're hoping to be able to have somebody on Zoom to be able to provide help. You do need to register for those. And Jen's already mentioned about she's going to be sending out the registration link and making sure that y'all all get that. So I guess this is the thing I'm really excited about. We haven't been able to do this. We actually were gearing up to do this back in 2020. Of course, the world shut down, and so we weren't able to do this. So I'm very excited that we're going to be able to do this sort of in-person help. I think this is going to be really a huge benefit, especially for the people who are not as tech savvy and not as comfortable doing the stuff online. Okay, so I'm going to open it up for more questions now.
Okay, so folks on Zoom, type your final questions into the Q&A. And we are working on dropping the link to register in the chat for you guys. And for you guys in person, I will give you my business cards. If you want to call me, I can help you guys register for an appointment if you want to join us for one of those help sessions. Anyone in person have any final questions for us? Yes, sir.
Just wonder, once you go through a property tax, please, is that, should the situation change somewhat later on? Would that be a process that we could have to get property tax please?
Yes, so the question is, once you get the tax freeze after you appeal, if that's something you can go through again. So basically, when your 3-year freeze ends, you would then have to do another appeal and go to the Board of Equalization hearing. So you just basically have to do the process over again once the freeze ends. All
If
right.
you do it every 3 years, it actually, it can be a huge benefit.
Yes, we would recommend doing it every 3 years. And again, for everyone, we will do this help sessions for property tax appeals this summer. So just make sure you're in touch with us and we'll help you guys through it, the same that we've done tonight, and one-on-one appointments too. All right, well, I think that's all the questions. I don't see any more in Zoom. Oh, one more in person. Yes, ma'am.
March 19th. What time?
Yeah, I'll help you.
Okay, so they say you have to register, noon and two of what day?
Both days. So we will be, both March 12th and 19th. We will be at these locations from noon to 2. So we have different 20-minute increments for people to come. So that's basically, you're just gonna let us know when you're available and you'll come and meet with us. We can talk about it, and for folks on Zoom, I'll send you out the link so you can register. All right, well, thank you everyone so much for joining us both in person and on Zoom and Facebook Live. It's been great being able to be in both places, and I hope everyone has a great night. Thank you.
Thank you.